Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist, with my good friend and my good pal. He is the one and the only Al Connickson. That's just to our knowledge. There might be another one out there, but there is only one like you, Al, and we appreciate your time on the show here today, dropping some knowledge on stocks, how they work, and just helping our listeners make smarter investing decisions. And on the last segment, we talked about really kind of a continuation of segment 2 and 3 with the importance of using leverage. In this one, it was in your retirement account. Not having all your eggs in one basket, keeping some of that money in cash, using that with leverage by using smaller amounts of money. And options is a great way or a great asset to get into those retirement accounts. That way you can use that smaller amount of capital, but also strategies to protect, which is what we're going to talk about here in the next segment. If you did miss seats for the investing class that we do locally here at the Academy, by the way, we have these classes all across the metro area during the day, during the weekends, during the evenings, mornings. So pretty much anybody can attend. If you want to come into these classes specifically on retirement, or there's ones on income strategies, simply just text the word investing to the number 210, and that'll be for 2 seats, one for you and a friend. Text investing to the number 210 for 2 seats for an investing class near you, or go to investingandtradinglive.com. So in this segment, let's talk through and discuss those techniques where, especially at all-time highs right now, Al, there's obviously opportunities, and people should be the most wealthy they have ever been, if you think about it. But people still aren't. And it's because they're not always protecting their portfolios. There's ways to protect that portfolio, because that's important, especially at all-time highs. You look at the overall stock market, especially last couple of days. We've been near all-time highs for a while now. But people still you mentioned earlier, still are not reaching those retirement goals. How do you protect those portfolios at all-time highs, but still be able to continue that growth in those as well?
Yeah, I think a good question for somebody to ask their plan sponsor, if you have a 401k or your plan administrator, ask them how you're protected. How are your assets in your 401ks protected, or even in your regular investment account? If you have an investment account with a broker, that's a great question to ask them. My guess is that the answer will be, well, we have you diversified. But as I mentioned one of the earlier segments, diversification cannot prevent loss. It might mitigate it a bit, but just because you're spread out amongst different sections of the economy in stocks or mutual funds, what happens when the market does crash or correct is that the correlation between equities becomes huge, so everything gets drawn down at the same time. So if you're not getting a satisfactory answer on how you're protected, how do you do that? Well, we show you how to do that, how to hedge your portfolio, how to use assets that not only can be used as protection, as the equivalent of an insurance policy, but also how to benefit in a down market. What happens to your 401ks when the market is going down? And if you watch the markets, if you looked at your 401k back in 2022, if you were extremely lucky, you were down a little bit less than 20%. Most 401ks, almost every one of them, was down over 20% in 2022. It's because the way that those are structured, it's hard to almost impossible to have protection. So we show you how to do that. We show you how to protect what you have in a 401k, how to hedge your portfolios. And it's even more important than protecting, it's benefiting in different directions. And remember, when the market goes down, the return you have to have on the upside has to be much bigger than what you just lost. If the market goes down 50%, you have to be up 100% just to get back to where you were before you can make 1 penny of profit. If you're down 40%, you have to be up 67%. So you have to keep that in mind, and you never want your portfolio to take a hit like that. There are ways of making sure that that doesn't happen. So protection is huge. In fact, if you go back to the year 2000 and 2008, Josh had just mentioned that we're at all-time highs. We were at all-time highs then too. There were a lot of people who retired in 1999 or 2000 or 2007 or 2008, thought they were set for life, and all of a sudden they woke up the next morning.
Whoopsies.
It took more than one morning, but over the course of the next year or so, they had lost 40 to 60% of what they had and were relying on in retirement. And what we found, in fact, T. Rowe Price examined their portfolios and that their clients had during bear markets. They went from 1973, 2000, 2008. It took 10 years on average for the accounts to get back to where they were before. That's in a bear market. What if we have a flat market? What if when you retire, we go through a period of time where the market really doesn't do anything? How are you going to survive without your portfolios growing? Mm-hmm. And have we had things like that? Yeah. Between 1902 and 1920, it took 18 years. The market had no movement. At 25 years between 1932 and 1957, a flat market. From 1976 until 1992, 16 years before any profit mm-hmm. could be made. And then from 2000 to 2014, that's 11 years. 14 years. My math wasn't very good there.
You need a calculator.
2014, there's 14 years where you weren't making any money. And during that time period in retirement, you're probably drawing down money.
Yeah.
And that money that you're taking out, you're paying taxes on. So you need to make sure in retirement you have enough income so it not only provides consistent income for you, but it does so in a way where it at least outpaces inflation.
Yeah, and that just like a lot of things. So there's people in that camp that are afraid, the market's going to go down. But there's also probably half our listeners that are out there that are thinking, well, this market's going to continue to go up. It's supposed to. That's what you hear all the time. And quite frankly, that's what it's showing.
Yeah.
So let's have that discussion, because what are some things people can do? I mean, even though the markets are going up, people hopefully have the most money they've ever had, but it's still not enough, right? So what would you say a good opportunity to do with that is? Because if they feel it's going to go up and just doing the same thing over and over and expecting a different result, you know what that is. I mean, everybody knows that's insanity. So how can people stay in the market if that's what they think? Mm-hmm. What can they do to boost those returns a little bit? Would using options be probably the best opportunity for that?
I believe that options probably are the best opportunity. That's what I trade. I may be a bit biased, but even back when I was a broker, that's one of the things that I use for some of my big clients to help protect their assets, but also allow them to stay in the market for growth. Mm-hmm. And you can do that. There are option strategies where you're protected if the market goes down or if that asset goes down in value, but you're also still participating if it goes up in value. And you may be thinking, how's that possible? Well, come in and we'll show you how that's possible.
Yeah, it's because you can.
It's because you can.
It's the strategies that are designed for that. And it's just like anything, if you think about it, Al. If you don't know, you're not going to do it. Mm-hmm. But that's why you teach these investing classes. I mean, your background as a broker, you have kind of the best of both worlds there, because what a lot of people appreciate is the brokerage side of it, but also you knowing what they're doing and why they're doing it, and you can get that point across to them so they can understand it may not be that good for you. So that's why these investing classes, especially this summer, with the way the markets have been exploding right now. We've been having so many people come into these classes, people just like you, to just get more insight, to know what's going on. And then once you know what is going on, what are some of the strategies that you can use for yourself to get to where you want to be, whether it's financially or time or schedule or freedom. Freedom of time sometimes is what people are just looking for. It's not always just monetary. And that's the great thing about the markets is it does provide several opportunities. It's not just monetary. So these investing classes that we have all across the metro area, also in our state-of-the-art facility here, we're actually right here in Bloomington, and a few different classrooms. These classes are really where we've taught thousands, just like you, our strategies, which are designed to help you make smarter investing decisions. They're about 2 hours long. Al, in about 15, I'm going to give you 20 seconds here today. Explain a couple things you're going to learn in this class.
Well, there's a lot of things you'll learn. One of them is how the markets function. Why does price go up? Why does price go down? Who makes that happen? And how can you benefit from that? And you'll also learn about the different assets that are available to trade. We don't care what anyone trades. You can trade stocks, you can trade mutual funds, but we want you to know what the benefits are in assets like options, futures, forex. We'll talk about protection, talk about leverage. We'll talk about having profits in the down market, not just an up market. You don't want to miss out on 50% of the opportunities.
Yep. So basically, the opportunity is there for you. You have to take action. And I want to give away one last set of tickets for this investing class right here at the Academy. Simply to come into this class is specifically on income strategies and retirement strategies. Text the word investing to the number 210-210, and that's for 2 seats, or go to investingandtradinglive.com. Al, we've had a great discussion here today. Let's hear today's OTA tip of the week.
I want to quote Dr. Stennett Ballou.
I thought you were going to say Dr. Seuss.
No, not this time. Maybe next week. Quote, I want to do what I can while I can, so when I cannot, I will not wish I would have when I could have. Hopefully
that's a tongue twister.
Confusing. So look, if you have a dream, if you've got a goal, and you don't take action to achieve it, you're just simply not going to make it a reality. It has to start with a single action. You have to be the one taking that action. So you can't always, and I'm going to say almost never, wait for the perfect moment or the perfect time. You have to create it.
Now is that time. I want to give you an opportunity to hopefully change your life or improve or enhance whatever that goal or objective is. As Al said, it does take some action. Text investing to the number 210-210 for an investing class strictly on stock strategies, Forex, futures, option strategies, income and wealth, or go to Investing and Trading Live. We had a great show here today. Stay tuned next week. As always, same time, same place next week. Until then, retire young, my friends.